If you hold XRP or XLM, you officially have 4 days until ISO20022 implementation globally. Now, what does this mean? Why does this matter? Will this affect XRP or XLM in a positive direction, or is this all a massive setup before one of the biggest crashes in crypto history? So it's time to act fast. We're gonna jump right on the computer. I'm gonna dive right in, and we're gonna get into the price action on the chart here that you do not wanna miss. This is gonna be one of the most valuable videos that I've made all year long. So as always, comment 777 if you're feeling blessed, if you're feeling bullish. If you're wondering how the ISO20022 integration is going to affect your portfolio, you do not want to miss this. Let's run it. All right, bull riders, welcome back to the channel. So with the entire crypto market sitting in 17 out of 100 in extreme fear, still at levels that we were at in April of 2025 and March of 2025, well, we've seen the crypto market experience a nasty pullback over the past week, but over the past day, we're experiencing a bounce in the market. So the main thing that we need to discuss is not only what's happening on the price action on the chart, but how will the ISO 20022 deadline this month coming up in just a few days with SWIFT and this coexistence period ending affect XRP, XLM, the other cryptocurrencies that have been mentioned in the ISO compliance list. Now, we're going to also dispel some myths here because on swift.com, the ISO 20022 implementation, there's a coexistence period that customers can decide when to enable this messaging standard for cross-border payments. And on their site, it says the deadline here, is November 22nd for them to consider implementing the solutions to process and store richer and more structured messaging that will impact the core payment application, middleware, reconciliation, AML, KYC, which is know your customer, archiving, reporting applications, messaging interface, and acquisition channels. And to extract and realize the true benefit of this new messaging standard, it needs to be implemented end to end. Now, this has sparked a lot of controversy about massive amounts of money flowing into XRP or XLM, specifically videos like this.
Processes $5 trillion daily, or 1.25 quadrillion annually. If you didn't know what that was, quadrillion annually, SWIFT. If XRP captures 5 to 10% of volume, let's just say 10% of volume, $125 trillion annually. The demand for XRP, by the way, it could be any of these other technologies we're talking about. Analysts estimate that a $10 trillion market cap could push XRP's price to $100 per token, with full replacement potentially driving it up
to $1,000 a token. So it's created these insane price predictions for XRP, causing a lot of hopium, causing a lot of hype. And then underneath the official ISO 20022 Q&A section here, it's saying cryptocurrencies are not inherently ISO 20022 compliant because there's been a lot of confusion and misleading information on the web referring to the compliant cryptocurrencies, but those statements are not correct because the cryptocurrencies are not managed and not registered by ISO 20022. ISO 20022 is a global standard for financial messaging and provides a common language and structure for exchanging financial information. And if you guys go to ISO20022.org, underneath their frequently asked questions here, and you just scroll all the way down to the bottom here, there's 3 main questions revolved around cryptocurrencies. For example, are there any cryptocurrencies that are compliant with the ISO standard? Can I indicate cryptocurrencies in the ISO 20022 messages? And can a blockchain company be ISO 20022 compliant? And this is important that you understand this because what a lot of crypto influencers and people out there on Twitter and YouTube are saying is that XRP, Stellar's XLM, Algorand, etc., are ISO 20022 compliant. And that only ISO 20022 compliant cryptos will be used in the new global financial system. And SWIFT is being replaced by ISO 20022 compliant blockchains. So this has been one of the biggest marketing narratives in crypto since 2021, really. So this is the truth about what SWIFT is actually saying, so you can have clarification here. So number one, ISO 20022 is not a standard that cryptocurrencies themselves can be inherently compliant with in the way that people think. So think of the ISO 20022 messaging standard like a dictionary and grammar for how banks, payment systems, central banks exchange financial data with each other. It's used for traditional payment messages like credit transfers, direct debits, security settlements, etc. And number two, cryptocurrencies are not registered with or governed by the ISO organization because the label doesn't apply to tokens or blockchains themselves. They have a separate standard, and that's called ISO 24165 for registering digital token identifiers. And number three, some blockchains or companies can and do create messaging layers that use the ISO format. For example, Ripple, the company, has an ISO 222 ready messaging plugin for its enterprise product, and that's RippleNet. And Stellar and a few others have built or are building ISO 20022 message translation layers. And this means that a bank that already speaks the new ISO messaging standard can more easily talk to these networks, but it doesn't make the cryptocurrency in itself ISO compliant here. So starting November 22nd, Swift and major players like Fedwire, Target2, Chips, etc. will fully migrate their interbank messages to the new format. And this is just an upgrade of the language that traditional financial companies use amongst themselves. So the truth is banks are switching to the new ISO messaging standard, but that integration in 4 days is not going to have the effect on the price action that most people think. In fact, there's more important catalysts that are going to affect the price action in the immediate term that we need to focus on, and one of which being the Clarity Act.
This is further clarification. The Genius Act gave us clarity on stablecoins. This new bill will give us clarity on much more within the general world of crypto, and again provides the rules that the traditional finance industry, banks, insurance companies, credit card companies, as well as the Fortune 500 generally, need to know that they're able to engage in this marketplace. They know what they're allowed to do, how they're allowed to do it, how they have to disclose it and report it, and pay taxes on it. And this is going to unleash the burdens that have kept everybody out of the marketplace. The result of all this, tell you, you're going to see hundreds of millions, probably hundreds of billions of dollars, perhaps even trillions of dollars flowing into Bitcoin and other digital assets. And since all of these coins operate on a supply-demand issue, just like any other asset, we're anticipating this is going to be the beginning of a major source of inflows and price increases over the next several years.
So the key here is over the next several years. The ISO 20022 deadline date for November 22nd is not the finish line, it's the starting line here. And what's more important is the liquidity injections that happen into the crypto market, leading us into December that we're going to discuss on the price chart in a likely scenario. But we've seen 3 global outages in the past 30 days between Amazon Web Services, Eurofiber, Cloudflare, and it's happening coincidentally around the ISO 20022 implementation and Ripple's quiet expansion and acquisition of very key companies here. And so is this all just a coincidence, or is this a stress test for the new digital economic architecture? Well, it's very interesting how these 3 outages are 3 different layers of global infrastructure, all within the same migration window. So AWS is Amazon Web Services, that's the computer layer. Eurofiber is the physical transit layer. And then Cloudflare is the routing plus security layer. And these outages are lining up just suspiciously close to the new ISO 20022 messaging standard. That's going to be the new backbone for real-time tokenized payments and cross-border settlement. And banks don't just test this stuff by pressing a button. They simulate failures across clouds, fibers, and edge networks. And suddenly, with all 3 failing, this is leading a lot of people to believe that it's a rehearsal, not just an accident. And every single outage occurred on networks tied to interbank messaging and digital identity pilots. Because Amazon Web Services has been hosting CBDC sandboxes, Eurofiber connects banks, data centers, and financial hubs, Cloudflare protects routing tables tied to financial APIs in banks' ISO 20022 services. So when these 3 wobble together, it's not downtime here, it's dark zone testing, which is a method used to test systematic resilience under controlled chaos. And the new digital economy needs one thing, that's infrastructure that can't break. Because when we talk about real-time settlement, high-frequency cross-border messaging, tokenized assets moving 24/7, they need to test latency, throughput, rerouting, failover behavior, BGP level resilience, and that's exactly what these outages look like. And we've seen this pattern happen before with major outages that later turned out to be tests. Facebook's 2021 blackout triggered during the BGP routing experiments, Google Cloud's 2019 collapse caused by traffic sharding tests, Visa Europe's 2018 failure happened during back-end hardware migration, Amazon Web Services S3's meltdown caused by scaling tests gone wrong. And every time the public was told it was a random outage, and each time it was actually infrastructure being upgraded. Now what's interesting here is Elon Musk said that X money will be rolling out to the public very soon, and it would only make sense for X money to be ISO 20022 messaging plus compliant crypto plus institutional liquidity plus real-time settlements. And you don't launch something of this magnitude just half-ass here. You don't do it willy-nilly without coordinated tests. What do you actually do to stress test it? Well, you simulate failures across every layer of stack to see how the settlement web behaves under pressure. And the timing is just too perfect here. The alignment is too precise. All these outages happen during CBDC trial expansions, during ISO 20022 implementation, during bank-level messaging upgrades, during the rise of ZK-proof identity systems, during renewed XRP Ledger institutional partnerships, And the closer and closer that we get to the implementation of this new standard, the more strange things will happen, even after it takes place, like blackouts, potential cyber attacks. Basically, they need an excuse to justify the new financial system, and it's all by design. And banks are finally waking up to this.
What banks are waking up to is, over the next 15 years, there's going to be the largest wealth transfer in history.
It's already started.
It's already started, from baby boomers and Gen X to Gen Z and Gen Alpha. $80 trillion of wealth is going to be transferred to digital native generations. You know, these are people who are going to expect money and investments to be as instantly movable as a text or a video file. And, you know, blockchain really is best seen as a recognition that most money and financial assets are just digital information on ledgers.
Right.
But in the legacy world, there are lots of different ledgers that don't talk to each other. And so you end up with unnecessary friction and cost and intermediaries. Whereas this new coming generation is going to expect instant movement of money globally. And that's what blockchain facilitates. So, you know, the big story here is banks need to prepare for what this coming digital native generation are going to want, you know, from financial services. And at the most basic level, they're going to want access to digital assets.
Now, this is why we're seeing one of the biggest pivots from some of the largest companies in the world diving full-fledged into blockchain tech, distributed ledger technology. And this company, for example, Notcha, governing the thriving ACH network, the payment system that drives, you know, safe, smart, and fast direct deposits and direct payments, being named the preferred partner for ISO20022. Well, they put this out saying Stronghold is now wired into the U.S. payments backbone for pay by bank, POS e-com, and data-rich rails for programmable money. Now, listen to what Stronghold said right here.
All SIPA payments to use 2022, while the Federal Reserve in the U.S. is encouraging financial institutions to adopt it by 2023. So what does this mean for digital currencies? ISO 20022 has the potential to play a key role in the development and implementations of CBDCs, as it provides a flexible and standardized framework for financial messaging that ensures consistency and interoperability between systems. Adopting ISO 20022 could increase the use of cryptocurrencies that are compliant with it. Two cryptocurrencies that are members of the ISO 20022 standards body are Ripple's XRP and Stellar Lumens. Recognizing the value of ISO 20022 messaging and its potential to transform the financial industry, Stronghold has utilized this technology in conjunction with blockchain ledger payments in select projects. Messaging standards are crucial for enabling the efficient and secure exchange of financial information between different systems and technologies. They play a critical role in improving the overall performance and reliability of the financial services industry.
Now, what's interesting here is this picture with Trump and Citadel Securities and, you know, the bearable guy's blue brick on the castle here, and also stack that on top of Stronghold's logo here, plus Trump tweeting and so it begins. And all of this taking place all around the same time as ISO 20022 is just too strange of a coincidence. But here's where this gets weirder. You guys have seen the Gematria videos where we talk about how every single word has a numeric value to it, and those numeric values have meaning. For example, if we type in Stronghold here, it comes up in Hebrew, English, and simple as 449, 792, and 132. And it's the exact same numbers as Phoenix Coin, Astrology, there's Stronghold right here, and Triskelion. Now, you guys obviously know there's no coincidences here. The Triskelion is the ancient symbol here that Ripple created their logo based on. And this isn't a theory here, this is confirmed. What's strange is the gematria behind it all. And if you guys haven't seen my previous videos on the channel with The Simpsons talking about cryptocurrency, we'll just get stranger and stranger and stranger, because in a few of the episodes, The Simpsons have shown this Triskelion symbol. And in one of Ripple's offices, they talk about how the Triskelion formed their logo. And when you look up the word Simpsons, it comes up as the Phoenix and also Metacortex, which, as you know, comes up as Ripple XRP, XRP Ripple. And Metacortex is the exact same building in the movie The Matrix, and in Neo Anderson here, Thomas Anderson's ID card, it says 1996. And a little side note here, the X is like a sideways XRP there, which is the exact same year that the document called How to Make a Mint, the Cryptography of Anonymous Electronic Cash came out by who? The National Security Agency in 1996. So could this all have secret ties together over the past few decades to plan this all out? I think that's what's taking place right now. I don't think this is a coincidence here, because I don't believe in coincidences. And I'll tell you, the rabbit hole goes deeper and deeper and deeper. Over the past few years that I've been researching this stuff, my mind has been absolutely blown. And that's why I've been making videos every single day talking about what's about to happen. And even the CEO of Brad Garlinghouse in one of these previous videos, go check this out, guys. I uploaded this 6 months ago. It's titled Trump's UAE Simpsons Conspiracy here. Brad Garlinghouse has an interesting track record here because he used to work for Yahoo and also AOL. And when he worked for these companies, he did a tour of their office showing the Phoenix coin, and he kind of bypassed it real quick. He didn't talk that much about it. He just moved on because this was the secret project that they've been working on. So this is where a lot of people are saying Brad Garlinghouse is an industry plant, like a lot of musicians that just get put in the right role. But I can't knock the guy. I think he's great. He works hard. He's the perfect person for the role. I just think all of this is a little too strange to call it just a coincidence here. It takes a higher level of thinking to know that something much deeper is going on behind the scenes for the new financial system. But does that change what's happening on the price chart right now? Well, the cryptos have been selling off. In my previous video yesterday, I talked about a bounce for Bitcoin on the weekly chart here because of how the stochastic RSI has been in oversold conditions. Even on the daily chart, we're down here at 5 and 4. So I would expect there to be a bounce for Bitcoin back up to the 50 EMA on the daily and also on the weekly chart here in December. And that would roughly put Bitcoin back between like $98,000 to $100,000. You know, we've used the 50 EMA as support throughout this entire bull run. And the fact that we had this weekly candle body close is not the best sign in the world, but I do expect there to be a recovery over the next few weeks. On the daily chart here, we can see what happened. The last time that Bitcoin sold off below the 50 EMA, we saw it use it as resistance here multiple times until eventually it broke back above it. So I would just expect the 50 EMA leading into December to act as resistance. And then if Bitcoin is in a bear market here, well then rather than breaking above the 50 and then going back to a new high, then Bitcoin would use the 50 as resistance and then sell off to the downside. So what do you do in a scenario like this? And how does the ISO standard have anything to do with, you know, price action? Because what if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a 100K funded account with 0 of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent. That's your groceries. That's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival. Whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with 6 figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click Start Trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout, and if you skip it, you're leaving 10% on the table forever, so it's well worth it. Then you simply pay for the test, You pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded. When all else fails and you get caught in believing fundamental news and you get overly hyped on something that takes decades to play out, I mean, guys, all of this is going to take decades to play out. Even Swift, which was launched over 50 years ago, they started back in 1973 here to transform the way that value transfers across borders, similar to how Ripple launched back in 2012 with the creation of the XRP ledger. And back then, the company was known as OpenCoin, and it was founded by Jed McCaleb, Arthur Britto, David Schwartz. And by the way, David Schwartz used to work for the NSA. And a lot of people are saying is one of the members of Satoshi, which is a group of people that created Bitcoin. And then he moved on to create the XRP ledger. But this all takes time to play out. And so in 4 days from right now, yes, it's going to be a massive monumental moment, but it's just another piece of the puzzle here that is going to take place over the next 10, 20, 30, 40, 50 years. Because if we go from 1973, well, it was 1977 when Swift went live. By then, the number of institutions in their community had doubled, and they had 518 institutions from 22 countries. But it took another 3 years for the first central banks to connect to Swift. So it took 7 years to really bring some central banks on board. And then it took another decade of innovation here. In 1991, Swift was recognized with the Computer World Smithsonian Information Technology Award for transforming financial communication. Now, I'm not going to go through the whole history lessons here on Swift, but it took until the early 2000s to become the backbone of the global economy here. So from 1973 to 2000s, we're talking about 27 years. Well, Ripple launched in 2012. We're 13 years in. So this could take another decade or so. And arguably so, I think by 2030 is when we're really going to see this go full-fledged here, just like what happened for Swift in the 2000s. And what we're going through right now is what happened from 1973 to the 1990s. So these strategic partnerships that Ripple has been making are not going unnoticed here. They're definitely going to impact XRP long term, but the problem is people have attention span of a goldfish, okay? They can't think much longer than a few seconds, let alone 24 hours or a week or a few months here. So this is why we use price action and technical analysis to get a better understanding of the likelihood that's going to happen next based on confluence across multiple different things that we look for. So one of the main things that I'm looking at here is what's happening on the stochastic RSI, the relative strength index, relative to the price action compared back to the past. So for example here, when we saw Bitcoin sell off from $99,000 back down here to $78,000, the relative strength index dipped below 30. Also, just recently, we've seen the RSI dip just below 30 with this sell-off down here. And the stochastic RSI has dipped down here closer to 0, 5.87 and 4 for the K line and the D line. If we look back at that sell-off, look at what happened for the stochastic RSI. It was down here closer to 0, which leads me to believe there's likely to be an aggressive recovery here back down to this descending resistance. So if you just connect the high of Bitcoin to these lower highs here, that could put Bitcoin roughly at $98,000 to $100,000. And then it would use the 50 EMA as resistance like it did back here in this sell-off for another consolidation here for Bitcoin to come back down either for a lower low or a higher low. So in this scenario back here, it was lower lows until eventually Bitcoin broke to the upside. So we have to take this, week by week and see where Bitcoin's price is on this recovery rally and also where that's going to put the stochastic RSI. So you need to watch these indicators here. On a recovery on the stochastic RSI, we'll see the price action recover with it. We'll see the relative strength index recover with it. But while we're in this downtrend, the RSI is staying below 50 right now. Usually in a downtrend, the relative strength index stays below 50 the majority of the time. As you can see in this downtrend for Bitcoin, the price action, while it was selling off, the RSI was staying below 50. Once it reclaimed 50, that's when the uptrend started for Bitcoin to a new all-time high. So while we're in this downtrend here, just forming lower highs and lower lows, we're still going to be in a downtrend and we're going to see some selling pressure at the $98,000 resistance because as you can clearly see, this is easy to understand here, where the previous support was, which is all the way back here, is now going to act as resistance. So this zone that had multiple points of contact, even going all the way back to May of 2025, June of 2025, the end of June, and then all the way back here in November of this year is now going to be the next zone of resistance. So once Bitcoin's sell-off is done, I would expect a high likelihood of Bitcoin to rally into this zone next, which is 98 to, $101,000, which would also be the 50 EMA on the weekly chart if we zoom out here on a more macro time frame. That is the next resistance for Bitcoin. Now, if you've been holding for a few years and you're considering getting out of the crypto market, we now need to see if this were to happen. Again, no guarantees here because it's not financial advice. Legally, I can't make any guarantees. It's funny. I see comments of people saying stuff like the if channel because people want definites here. And I've also mentioned how I'm never going to be right 100% of the time. So I can never be definitive here. I can just show you the data that I see on the charts. Then you come to your own conclusion. But I thought this comment was hilarious here, saying if you've never met anyone who's right 100% of the time, then you've never met my ex-wife. So what we do is we weigh probabilities here of a likely scenario to happen next. And if it takes place, well, then we look at where we're at on these key indicators and we look for the confluence here. Here's an example, right? The last time that we were down here below 20 on the stochastic RSI for Bitcoin's price chart, we were experiencing this sell-off back down to the 50 EMA. So now that we're back down here again, well, we're seeing this sell-off here down below the 50 EMA. So eventually the bottom will come in for Bitcoin. And if we see a recovery back to the upside, which we will, it's inevitable here. The real question is, how high will that recovery go? Nobody knows. But back to the 50 EMA is a likely scenario. Also, there's a 100% chance. So I can be extremely confident here because I will guarantee that the stochastic RSI will eventually come back above 20 and eventually come back above 80. So if you're considering, when to take profits, when to exit, regardless of this ISO20022 implementation over the next 5-10 years, you want to watch these indicators on a macro time frame. And the smartest time to consider, getting out of the market is when we're all the way up here experiencing bearish divergences, which I've talked about in previous videos. Now, looking at XRP's price chart, we can see that XRP closed below the 50 EMA on the weekly chart as well. And the stochastic RSI is at 6 and 0 for the K line and the D line in oversold conditions. So if you exit out of the market here because you think XRP is going to go down, it's back to 50 cents or let alone back down to $1, just understand that you would be selling while we're in oversold conditions on the weekly stochastic RSI. And that's like getting out of the market when XRP was selling off during this phase right here, when the smartest time to get out of the market is when we're in overbought conditions all the way up here. And you can clearly see on the price chart here, when I circle these peaks, where the stochastic RSI was at each time. We were either above 80, close to 100, or we are experiencing a bearish divergence, which is a lower high on the key indicator, like the stochastic and the RSI, and a higher high on the price chart. So what I would expect to happen here within the next 1 to 3 months is the stochastic RSI to experience a bullish cross, and this will likely take place surrounding the news that is about to drop really, really soon that virtually nobody's ready for.
Speaking of crypto, Nate, similar to the push to market we're seeing in IPOs, you're seeing a lot of what you call a boatload of crypto ETF filings. What does that mean, and how does that differ from what we've seen in the past?
Well, it's interesting because the three major stock exchanges, so NYSE, NASDAQ, and CBOE, they have all filed with the SEC for generic listing standards for crypto ETFs, which basically means that the exchanges wouldn't need to seek specific approval for each spot crypto ETF as long as it meets certain criteria. So this would streamline the approval process. And that's important because right now there are filings out there from multiple issuers for XRP ETFs, Solana ETFs, Cardano, HBAR. We could go on down the list, but there are a boatload of filings out there. And the expectation is that the standardized crypto framework will be implemented, say, in the next 2 months or so. And so if and when that happens, I think you're going to see the floodgates open. We're going to see a wave of approvals, and you're going to see, again, a boatload of new crypto ETFs coming to market.
And Franklin Templeton's $1.6 trillion spot XRP ETF will go live today. And if Canary pulled $58 million on day one, imagine what a $1 trillion giant could do for XRP. Now, there's still all these other ETFs awaiting approval too. And if you guys missed what the CEO of Franklin Templeton said, listen to this.
Bitcoin is the greatest distraction from the greatest disruption that is coming to financial services. I think AI is probably the other big disruption there. But and there's so much noise around a lot of things like FTX and others. But if you bring the technology down to its core value, it does three things. One is it allows a payment mechanism. Number two, it allows smart contracts to be programmed into the token. And three, because it's a general ledger, it has a source of truth. So whoever has that token, all rights in that token are granted to that person. So if I sell it to Frank, I don't have to go through a third party to do it. Frank gets it, and Frank gets all the rights. So my favorite example is Rihanna, who came out with, right before the Super Bowl, and I know she's just testing the market in this, 300 NFTs, each one worth 0.00033% royalties on one of her biggest songs. Well, why can she do that? She can do it because when Spotify plays a Rihanna song, it can capture, the smart contract executes and says, I owe royalties here. And so nobody has to be involved in it. And it can take the fractional payment and go to, because Frank's a big Rihanna fan, so it goes to his account, and he owns a couple of those, and he's paid, right? So now think about any way in which you have revenue streams or royalty streams that you can now start to fractionalize that or democratize that, and think about how that is an uncorrelated asset to all the traditional assets. So other examples is, I think that athletes are going to, they'll sign a big contract, they'll say to their fans, I'm going to sell off, tokens worth 10% of my future revenue stream. I'm going to, 100,000 tokens, and boom, the fans are going to probably pay a premium for it. So it will be a way, and if you think about it, it's just securitization done on steroids. And it's merely that this technology is enabling it, and it's also enabling other very interesting companies that will disrupt some of the traditional business models that we have today.
And Franklin Templeton just filed Form 8A to launch their spot XRP ETF on the NASDAQ, so launching is imminent here. And this is all around the same time while, number one, the stochastic RSI on the weekly chart is bottoming out. On the daily chart, we're experiencing a bullish divergence where the price chart's making lower lows. The relative strength index is making higher lows. Also, the stochastic RSI is making higher lows, showing that the bearish momentum is slowing to the downside here. And even if XRP has another equal or lower low here, the likelihood of a bounce to the upside for XRP in December is very, very high, causing the relative strength index to reclaim 50 and eventually go back above 70, and also the stochastic RSI to go back above 80 to 100 here. While XRP is breaking out, we'll see what that looks like on the price chart, but XRP has been in this downtrend since the 19th of July, and this would all coincidentally happen at the most pivotal time in the bull run at the tail end of this 4-year market cycle. So a lot of people that are still holding on to their XRP right now, here's a very important question. Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with iTrust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And iTrust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.